It's Tuesday, November 12th, and this is Markets Daily hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you are actively trading or just fascinated by what's going on in the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. On today's show, we are joined by Coinbase Institutional Head of Research, David Duong. David, welcome back.
Thanks, Jen. It's great to be here.
It's been an absolutely crazy, I would say, last week. So my first question for you is, how are you holding up?
Pretty well. I have a lot of friends who are not in crypto, but they are paying attention. They're coming up and asking, either asking me about what's going on or congratulating me. And I'm like, I don't know why you're congratulating me personally. I didn't do anything here, but yes, this is great news.
Well, I've seen a lot of tweets that say, uh, non-crypto folks are now reaching out asking about Bitcoin. We are so back. Are we so back?
I think we are. Certainly the potential for the regulatory overhang to be lifted, I think, of course, is, behind a lot of what's happening. And, there's discussions around the Bitcoin Strategic Reserve and whether that's a real possibility. And we can kind of, unpack that and talk about what the regulatory pressures on that might be. But for the most part, I mean, we're just all about the fact that right now the risk environment's good, the environment for crypto is good, and I think it's probably going to continue for another 1 to 2 quarters.
Well, everyone is talking about that Bitcoin strategic reserve, what that possibly could look like, and what that means for Bitcoin and the crypto markets. Do you want to talk to me a little bit about that?
Yeah, so I think that it was a great signal when you saw Senator Cynthia Lummis, who has been pushing the Bitcoin Strategic Reserve, pushing this on Twitter like the day after the elections, which gave me like two different signals. Number one, that means that on Capitol Hill, people are paying attention to this because I think one of the bigger concerns was that a lot of the crypto regulation could start to fade as we progress into the next administration, because how much of this is rhetoric, how much of this is real. But it shows that people on Capitol Hill are paying attention to this and they're thinking about it. So that's great. But the second part of it is, yeah, it's not as easy. It's not necessarily a unilateral decision that you can just make, right? There's a lot of factors involved, a lot of players involved. The Federal Reserve, for example, has a lot of restrictions in terms of what they hold on their balance sheet. And typically they're just treasuries and mortgage-backed securities. And once upon a time, they probably wouldn't have even put mortgage-backed securities on that list. So, I mean, it takes time for them to adjust. Internationally, for example, the IMF is a big player in terms of us giving the IMF money to loan out to other countries, for example, and they have certain limitations on what the special drawing rights are and what are included as reserves for that. And I don't say that this kind of discounts the idea that crypto could eventually be included, but the idea that this could happen in the next 100 days, for example, I think is still very difficult.
Yeah, I think you bring up a good point there. We had 10x founder Marcus Thielen on the show recently, and he said what he thinks could happen is maybe the government takes the Bitcoin that they already have. I think they have 200,000 Bitcoin that's been seized from various different criminal trials, and they put that into a side pocket, and that becomes this Bitcoin reserve for now, rather than executing on the full plan that Senator Cynthia Lummis announced at the Bitcoin conference. Does that sound like something that could happen as a first step towards this plan?
I mean, the idea that there will be intermediate steps in this, I think that for sure is very likely. Now, whether that will be the actual step that's going to be taken,
Mm.
um, I'll be honest with you, I have no clue. I really have no one who has told me one way or the other about this. But the fact that this is happening on the government level, the fact that this is happening on the corporate level, you're seeing a lot of corporate treasuries also talking about including Bitcoin on their balance sheets. I think this is, for me, what's really, really bullish here. And we got to remember that, this is not just the United States we're talking about. I mean, yes, it is, because this is our discussion of the Bitcoin Strategic Reserve. But a lot of other countries are looking at what we're doing right now. And having a crypto-friendly government coming into office, I think you're seeing a lot of other countries kind of paying attention and saying, well, hold on, like the next administration coming to the US has a plan on how to deal with crypto. We need to have one too. And so even regimes that may have been historically maybe not anti, but definitely like less friendly to crypto, for example, may now need to kind of change their tactics.
Okay, we talked about Bitcoin's reaction to the news. Talk to me about what else you're watching.
Yeah. So what I was kind of saying about that, I think, that's probably what represents one of the tail scenarios that I think is going to be massively positive, probably either in the first quarter of 2025 and possibly even sooner. Because, for example, we just saw the NPC meeting in China, for example, the standing committee meeting, and we don't know what exactly they talked about. Obviously, the big headline there was, oh, they're putting out around 10 trillion renminbi worth of stimulus from the fiscal side, which amounts to like 1.4 trillion US dollars. But I do believe that they're talking right now about what they need to do in terms of how to improve their economy and whether they need to open themselves up to crypto, for example. So I can't say for sure whether this has
Mhm.
been a topic that will definitely break into the mainstream, but we saw that their former vice minister of finance, for example, has talked about Bitcoin and crypto very recently. I do think that this is now becoming a topic of conversation over there. So I do see these as potential positive tail scenarios for crypto that could definitely take us a lot higher than where we are today.
I want to talk about meme coins. They have been this driving narrative of this bull cycle we're in. Memes always pop up or alts always pop up at some point in the cycle, but they've really been this driving narrative, especially when Bitcoin and ETH were kind of stuck in almost a holding pattern. Talk to me about your observations with memes and how you expect to see them perform as we head into 2025.
Yeah, I mean, meme tokens have been a very big part of this bull cycle and the core narrative around it. The idea of that is that they don't aspire to anything more than what they are, which is their basic attention grabbers, and yeah, that's what you're trading. And they've been the best performing crypto sector by a wide margin this year. A lot of that activity has been centered on Solana. And a big part of that has to do with the fact that Pump.Fun has been adopted pretty widely. They're the dominant meme coin launcher today. I think there are around like 3 million tokens that have been launched on Pump.Fun. I think over the last day alone, it was like 20,000, for example. So the dominance of this, I think, is very visible. And if you take it just by the pure network fees, for example, the value of Solana's token issuance trading processes around meme coins makes it the third most profitable on-chain sector behind stablecoins and layer ones. So I think that shows you right there, like this stuff is massive. And a lot of the top crypto applications by protocol revenue, they tend to be things that are in the way of trading this stuff. Telegram trading bots, for example, Solana trading tools. Like, I think these are the things that have really been well supported in the cycle because of all the activity that's happening on meme coins. So even though I think it's been easy to dismiss from some people to say like, oh, well, meme coins have no intrinsic value, or like, what do they really do for you? Well, yeah, but there's an entire ecosystem that's been built and dedicated to it.
Yeah, that's really interesting that you bring that up. I mean, for investors who are sitting listening to this, trying to make watching this video, trying to make sense of the meme coin narrative, what can we take away from what you've just pointed out?
Well, I would say that first of all, there's real activity that's behind this, and it's sitting on like the individual protocols themselves. So, how do you try to monetize this stuff, for example? Well, like, should I be if I'm looking at the Solana ecosystem, should I be buying Sol when it's undervalued, or should I buy like a decentralized exchange like Radium, for example, which is doing somewhere around like $8.5 billion worth of volumes, which is still a little bit less than like things like Uniswap, which is the Ethereum, the key Ethereum decentralized exchange, for example. But I'd say like great more and more people are kind of thinking, well, how do I kind of play this space? How do I think about the volume sitting on decentralized exchanges versus centralized exchanges? And where is the value capture best had? So I think if you're going to be looking at the space, that's how you need to start thinking now, because we're moving away from this narrative driven kind of market. And it's not to say that narratives still aren't very important. They still drive a lot of the strategies that we see both from retail as well as institutional clients. But Now more and more fundamentals are playing playing a part into this picture, and that's because the space is maturing, and that's because now people are focused on what is revenue capture actually look like in the space. And I think that particularly with the regulatory environment potentially clearing up, that's only going to grow over the next year.
You mentioned layer ones, meme coins, of course, stable coins. What sector, I guess, do you think is going to drive the narrative, or do you think is really going to stand out next year?
Yeah, I mean, I counted about 5 different narratives that I think are gonna be really important right now. Stablecoins as payments are probably the best
Mhm.
because they have clear product market fit, and we are seeing that everyone is trying to get a piece of that right now, and a lot of the traditional players, for example, are already trying to incorporate those rails in some way, shape, or form. Like Visa has, integration now with crypto rails and stablecoins. Stripe made that purchase of the bridge, for example. So I think that things like this are definitely clearly showing that even from the point of view of like Fed Governor Chris Waller coming in and saying, actually, you know what, like DeFi could be complementary to what's going on inside of traditional finance and removing those intermediaries from the processes of kind of moving remittances, for example. I think like that's why it's going to be huge. So I would say stablecoins, probably that also means DeFi is going to see a resurgence here because greater now in terms of more people trying to use these rails, figure out how to incorporate it. Related to that is tokenization because more real world assets are being brought on chain. And we've been seeing this kind of play out as a theme over the last 2 years. But I think now we're seeing the growth of this beyond just money market funds and treasuries into things like private credit, insurance, other assets, which I think are going to be very meaningful to what we're going to see in the next cycles, particularly as institutions really kind of step into the space. But then there are more crypto specific kind of themes that are also playing out. AI and the integration between AI and blockchain, I think, has been kind of toyed with in different ways in terms of decentralized compute, for example. But I think that we're seeing AI kind of manifest itself into other parts of the crypto ecosystem in terms of the user experience, for example, or having AI bots creating meme coins. So I think that the idea of AI bots is definitely becoming a much more prevalent theme. And lastly, I think DePIN. And we've kind of talked about this before, but decentralized physical infrastructure networks, for example, have been a long-standing kind of thing that we've had since maybe probably in 2017. But they've kind of waned and then they came back. And now I think that we're kind of still about 2 years out before mass adoption of a lot of these tools. But we're seeing that these, the way DeepIn kind of works, could be really useful and integrated into how people live their day-to-day lives.
I agree with you on all the sectors you just outlined there. And I want to talk to you about ETFs. That was one of the big narratives this year, right? Of course, we got the Bitcoin and the ETF approved in the United States. Um, Solana has seen an uptake, and part of the thesis there is that we could see a Sol ETF in 2025 with more regulatory clarity in the US. Talk to me about what you're watching when it comes to the ETF narrative.
Yeah, I go back and forth about this because we saw the success of the spot Bitcoin ETFs, for example, and despite some of the concerns people had around the spot ETFs, now they're starting to catch a lot more inflows very recently, and of course that has a lot to do with what we just had in terms of the political landscape kind of shifting. But we are kind of over indexed, no pun intended, on this idea of, oh, ETFs need to be single name ETFs. And that's why we're looking at XRP and that's why we're looking at Sol and other names, for example. But historically speaking, that's not generally how a lot of ETFs or indices are built. I mean, generally they're built to kind of capture a wide swath of assets because what you're trying to do is trying to capture a well-diversified portfolio. Like you look at the S&P 500, for example, over the last 10 years, like the S&P 500 has had 30% of its names dropped and picked up. Like just this year alone, we saw like some other companies drop from the top 500, and Nvidia was picked up, for example. So I mean, this is typically what an ETF is designed to do, right? It's trying to give us the best capture because we can't always know who the winners are in any given space. And crypto is included in that because we are changing rapidly. So I tend to think that if we see an ETF, it'll go more that direction because we have a lot of, still newbies out there, maybe people who want exposure to crypto, but just don't know what to do. Like they probably heard of Bitcoin, maybe they have heard of ETH, but they don't know a lot of the other ones, and they need an option to give them exposure without trying to just rely solely on, word of mouth.
Well, what a segue into talking about your news today. Coinbase has some news, the Coinbase 50 index. And I just got to say, most people who say CoinDesk say Coinbase, like CoinDesk and Coinbase get so confused. And now Coinbase has a 50 index and CoinDesk has the 20 index. And I just feel like people are going to get them confused. But talk to me about this. What was the significance of launching this index so close to that? Win for Donald Trump. Was there any correlation there?
No, so this has been in the works for a while. This wasn't like we saw this happen in the elections. We decided, but that said, the timing probably couldn't have been better. And I do think that what we're seeing right now is, I tend to be kind of an old school guy when I look at this market, and there are a whole new wave of people who have access to this diversified product, which, for anyone who has struggled to buy whatever token is out there, now they're capable of kind of saying, well, I can just buy this index. And, we are like the Coin 50 is targeting trying to be like the broadest index possible and give us exposure to not just historically, let's say like layer one tokens, which, there are existing benchmarks out there, but they're, for the most part, kind of like majority kind of referencing these smart contract platforms. Well, this particular Coin 50 index actually gives exposure to like meme coins to some extent, to DePIN to some extent. Yes, like everything is still probably going to revolve around what's happening with Bitcoin, but we do cap the top side of any one token to 50%. So, where Bitcoin's dominance right now is somewhere around 57, 58%, like on our index, it's actually going to be capped at 50%, giving you greater exposure to a diversified set of tokens.
David, we got to leave it there. Thanks so much for joining the show today. As always, it was a pleasure.
Jen, this was great. Thank you.
And thank you to our listeners. Thanks for coming on this journey with me to better understand the crypto markets. If you enjoy watching or listening to the show, subscribe to the CoinDesk Podcast Network. That is on all podcast platforms. We are on YouTube. You can subscribe there. Give us a thumbs up. Thanks for watching, and we'll see you tomorrow.